All right. Can you guys hear me now? I think we should be good. Everyone panicking. Yeah, now we're good. All right, perfect. All right. First things first. Uh, Good morning. Serge Berger here from the SteadyTrader.com. This is our Set the Market morning show. And what we are going to do right now is go through a sequence of stuff. Um, where to start? I guess I'll start off with what's sequence of events has been taking place this morning on our end. So when I woke up this morning, I had messages from about 5 or 6 funds that were checking in and kind of giving me their updates and basically asking for feedback um, in terms of some of the positioning and further expressing kind of some concern about the credit markets, which is a discussion we've been having for a couple of weeks with these guys. Um, then I received a call from a gentleman that's been running a lot of money for some very wealthy families early this morning at 5:30 Eastern, and he essentially told me that what he is seeing is credit problems arising in some of the banks. And so I want to just take you here today over the next 10 minutes through sort of a playbook without giving you the specific trade necessarily, because that has to be done in kind of real time. That's why we have trade ops, but kind of our thinking of what's going to happen here. So what I did this morning is I further think that we're going to see a relief bounce of some sort and the equity market. And basically what that means is I think we're going to start to see implied volatility come down a little bit. So there's various ways of structuring that. We've been showing the VIX chart now for some time. This is a bit of an oversimplification, but I think it gets the job done. Typically the VIX around 60 or so, it doesn't last very long. Can always go back up there, but you typically see some sort of a bounce. So lower in yields, lower in VIX, and sort of higher in equity prices. And typically that'll come off some sort of a news event, either from the White House, maybe on some sort of a tariff postponing or pause for a little bit, not taking them off, but just maybe a pause, or something out of the Treasury, or even an emergency rate cut from the Fed, right? These are all possibilities. And so, because what's happening this morning, we're starting to see bank stress in funding prices. And, that's important to understand. So there's a very fine line here between what we are seeing coming out of the Treasury, kind of defending, their actions, the tariffs, and how they don't care about the stock market. The problem is the stock market and Wall Street also vote with the bond market. And if the bond market starts freezing up on the short end of the yield curve, then the economy just literally shuts down. So yes, actually, Thomas, the world could be ending in that scenario. I don't think that will happen, but you have to be mindful of understanding the short-term funding consequences when people panic. Me, I'm a rates guy. That's what I've done my whole life. I focus on the short of the yield curve, the long of the yield curve, and the macro stuff. And yes, that is a very serious problem. The world probably isn't going to end, but that is a huge problem to be very much aware of. Okay, so let's be very serious about that. However, in the near term, we could see some sort of a bounce in the equity market, again, based on some sort of a headline, something like that. So that's sort of the initial points. Let me just quickly go to the S&P 500 and kind of overlay this because I know a lot of people just like to focus on the S&P, and that's fair enough, right, for this kind of a thing. So what we're seeing here is we are seeing a situation where the VIX is where it is. We are seeing the S&P at a pretty logical level, and the price action over the past few days, if you just look at the S&P 500 and this is notable, if you just look at the past few days, we've basically kind of been in a trading range. So if you look at the S&P 500, basically ever since last week, Friday morning, basically, all we've done is remain in a trading range. Now, that does not mean that we can't, break down lower and have some sort of a total collapse. But even then, again, I think you're going to get headlines out of the Fed, out of the Treasury, maybe, or maybe something out of the White House. Those are all three different branches, right? So my guess in the very near term, and this is not financial advice here, is that we're going to see some sort of a move meaningfully higher. Maybe from these levels, maybe we get a 10% bounce. That's easily possible. And one of the discussions I had this morning at 5:30 with the gentleman that runs a lot of money was basically around the structuring of that idea. However, and this is the bigger thing, and I really would encourage you guys to write this down now. The biggest problem is this, okay? And I'm going to write this down. Okay? I'll make this really large. And I'm going to try to explain what this is. I'm going to start making videos on this and I'm going to explain to people what this means for you and why you really should give a shit. Okay? So we are going to get a credit event. We're going to get a series of credit events. We haven't had credit events outside of, the regional bank crisis in 2023. And of course, before then, the great financial crisis. But we're going to get credit problems. That's our base case. What does that mean? Essentially, what it means is that you're going to have spillover effects, even if we come to an agreement on tariffs, because there will be tariffs, right? Let's say there's only tariffs from China. You're going to have a lot of companies that have very small margins, operating margins, that are going to get squeezed and they're going to go out of business. Not just in China, but also a lot of companies here in the United States, in Europe, and around the world that are running very low margin businesses. Okay? So this is really important. And this a short term, and this is not going to be fixed immediately. This takes time, so you're going to get a credit event. You're going to get people going out of business, basically, when they can no longer, make good on their promises and they can't get enough funding. And this is normal. This happens. It's a clearing event. We live in a giant gambling bubble. I've been saying this for 4 years. No one cared. I get that. When everyone's making money, no one cares. And here is something to write down. Now, I posted a chart this morning, this chart here, in our Trade Ops members area. So in here, I'm going to quickly bring it over so you guys can see this. I posted this chart early this morning, right there. And I said that we're going to get credit events. So the reason why something like Blackstone, which is the ticker symbol BX, is important is because this is a company, and this is a huge money manager and very important. Blackstone, Blackstone, did I say BlackRock? Blackstone, okay, is because there's a lot of private equity stuff that is now running with a lot of leverage and low margins. And so what you're going to get is a squeeze, in this case, not just on Wall Street, but also on Main Street. And I'm going to write this down. And remember, I can't give advice here. I can only do education. We can only do advice at Blue Marlin. So if you own, I'm going to go out on a coaching limb here, if you will. If any of you own any private equity stuff in your portfolios, send us an email. Remember, I can't give you advice here to Study Trader, but I can at least coach you through it. This is very serious, okay? I had 3 discussions, or maybe 4 discussions actually on this over the past couple of weeks with people, and this is something that's going to be a problem. I think we have a giant private equity bubble. That's not because private equity is bad, but because there's going to be liquidity squeezes and margin squeezes. So if you go check your portfolio, go see what someone has maybe stuffed in your portfolio, or maybe you did it yourself. If you own private equity, send an email, support@thesteadytrader.com, and I'm happy to talk to you personally through the lens of education, what may be worth considering. I've traded through this before. I've lived through this before. Credit events are no fun, okay? This is not your 5% dip in the S&P. This is shit you can't get back out of, okay? This is very, very serious. I'm not trying to spread fear. I know that's what it sounds like. I'm really not. I'm trying to be realistic and help you out. That's the whole point of being in here every morning, and hopefully this is resonating with you guys. So if any of you have any private equity, you don't have to tell me here. It's really useless. Send an email to support@thesteadytrader.com, and I'll talk to you through the lens of education, right? It's very, very serious, okay? So, and even if you don't have private equity, you probably have stuff that's very highly correlated to that. And if not, then you're a genius, and that's awesome, right? And that is very well possible. But this is an important chart. So watch Blackstone, because, again, a lot of stuff is very oversold in the near term. But I think what you're going to get to soon is once, and I don't know if this is going to be, something that happens in the third quarter or even already in the second quarter, which started now, where you're going to start to see hear a lot more problems in the credit world. Okay, so this is very serious. Again, I'm really not to be alarmist. That's not my points, but I see that people are completely oblivious to all this. There's still the questions we get, and it pisses me off. Excuse my language, to no end. That people are still buying us. When do I buy more Nvidia? When do I buy more Palantir? Unless that thinking stops, the market's going to go down way more, like 50, 60%. Not today. Again, I think we're near term oversold, but over the course of time. Okay? So if you own a private equity fund, and you will know if you do in your portfolio, or if you own even something like Blackstone, the stock, right? Go check it out, and I'm happy to talk to you. Support@thesteadytrader.com. Send us an email. All right? Now, let's take this another step further. And so these are credit problems. We haven't had this before. Take it from someone who I follow credit very closely. I follow the rates market very closely. This is how I started my career just before the great financial crisis, and through the great financial crisis. And this stuff is very serious because this is the underpinning of the economy. Your Palantir and Microsoft stock are important, but they're not the underpinning of the economy. Credit is, right? And so when you have credit problems, they snowball. The problem with this stuff is it's now in people's portfolios that are oblivious to it. And so let me put it another way. If you have been approached over the past 5 to 10 years with someone telling you about some great, 8, 9, 10, 12% fund, that just pays you coupons every month or quarter, it is highly likely it was something like this, right? It's not all dog shit, but a lot of it will be illiquid. It's going to have 50% drawdowns. It may go to 0, and you may not be able to get out, right? So credit is a different world. If I have time over the next couple of weeks, I'm going to start making some YouTube videos about what is credit and why you should care. Like you right now that you're listening right here, it will matter to you and your portfolio, right? It will matter, and it's going to matter how you trade as well, right? If you think you're going to be a trader, this is an unbelievable environment to be trading. I mean, let me just quickly show you this, but you need to understand that you have to be a trader. 5% dips in the S&P, that strategy, I've been saying it now for weeks and weeks and weeks, just forget it. Like that's not going to be your strategy anymore. You're either going to be trading, you're going to piss or get off the pot. It's really simple. So if you want to be a trader, here's what I've been doing over the past 24 hours. Okay, I'm going to quickly show you what this looks like and how you can take advantage of these opportunities. So if you want to be a trader, and you don't have to be intraday for this, but I'm just kind of trying to show you how you can take advantage of this. Okay, so you could have been short the Nasdaq 100 based on our trend or momentum indicator. So that's a way to make money, Bill, right? Be short futures or just the Qs or whatever. Then we got a buy signal. Then we got a sell signal. Then we got a buy signal. And then it got a bit choppy, and now we just got a new buy signal. Okay, so that's one way to make money from this. Now, in this market. Now, if you want to talk about the credit risk, right? That's a whole bigger issue. That's going to take more time. One thing we're looking at, and again, this is not, you need to understand this is not a simple just, oh, I'm just going to buy a call or a put. Like, this is way more complex. One thing to do is to be short regional banks. That's an oversimplification, but that could happen. Another thing that one could do is one could be short some of these stocks like Blackstone. I personally don't want to be short here right now because of what I said. I think we may get a very sharp rally near term. That's possible. But that's another thing. That's another way of doing it. Otherwise, you have to be more granular. You have to start getting to credit. What I'm trying to do, and a gentleman the other day told me I'm trying to do God's work, whatever that. I think what he meant is trying to do the impossible. Is trying to get people to not blow up their portfolios. Like, that's my one goal, and I hope I'm coming across sincere because I really am. I mean that because I know what's happening already, and I know what will happen to a lot of people. So I'm trying to help you out. So if you have private equity stuff in your portfolio, and you might, right? I don't know exactly every single person here, right? Then email support at thesteadytrader.com. Again, I can't give you investment advice, but I can certainly talk to you about the lens of education. It's really important. Okay, so I'm going to leave it at this right now. I hope this is helpful. I think today we are going to have a wild trading day. That's my hunch. Not that far of a crazy sort of thing to say since we've had wild trading days pretty much every day. But I'm waiting for right now some sort of a headline, right? Where, again, either from the Treasury, maybe from the Fed, maybe out of the White House, where they're going to come out with some help, whatever that is. I mean, each one of these entities has different ways of helping. The White House could say something like I said before, we're going to pause certain tariffs for just a little bit. That would help the market go straight up 10%. The Treasury could do something. Again, maybe the Fed. I don't know, but I would be, if I was short in size right now, I would be very nervous. Like, that is not where I want to be right now personally. Could I be wrong? Of course, I could absolutely be wrong. On the credit side, that's not a trade for today. That's a positioning problem, and that's why we think we are likely heading to some sort of a recession, or at least, and again, I don't know how severe that's going to be. It really depends. What I can tell you right now from the calls I've had this morning and last night and the past really week and a half is that we're starting to have funding problems with the banks, okay? And that is very serious. And that's why I think we're going to have some help, coming out of the three aforementioned. And they might even work together on this, right? So anyway, I hope it was helpful. We'll see you guys back here tomorrow morning, and I'll see you guys over in Trade Ops in a few minutes. Get ready for the trading day. Hope it helps. See you guys tomorrow. Oh, very important. Almost forgot. Subscribe to the channel. Very important. Give us a thumbs up, like. That way we can continue the show, and then you get a letter real time. We're going to go live a lot. We've been going live a lot here on YouTube. We're going to do a lot more. We're just getting started, really, because people need to be informed in this market. This is not, buy a call or buy the S&P and go play golf for a year. This is a very different kind of environment. So